Hi, everyone. I'm Nina Fiore with Different Choices. Denise Moorhead and I will be managing the webinar. So thank you for joining us for Managing Your Credit Score, which is part of the Smart Money Financial Literacy series for college and career-bound students, their families, and those supporting their successes. If you have any technical issues, please contact us at support@differentchoices.org. And if you have any questions, please put them in the chat and I will share them with our guest speaker, who is Rob Up. He's our presenter this evening. He works for TDBank and he's a sourcer for veterans and individuals with diverse abilities. He's spent years working with Major League Baseball, also as a captain in the U.S. Army, as an information operations officer, including service in Afghanistan. And now at TDBank, Rob helps vets and others with disabilities obtain jobs and support at the company. Rob has graduated from Moravian University and Northwestern. He'll be talking to you tonight about the ins and outs of loans and credit scores and explain how to keep on top of your finances after leaving high school. Feel free to put questions in the Q&A and we'll share them with him as we go along. But before Rob begins, I want to introduce you to Dr. Paul Stein, who's the Executive Director of Schools for Children. Dr. Stein has provided visionary executive leadership for Schools for Children since 2017, where Schools for Children has doubled its programs, embedded diversity and inclusion into the fabric of the programs, and created transition resources like Different Choices. A former superintendent of schools and a principal, Dr. Stein began his career as a math teacher in alternative special education school settings.
Thanks, Nina. Welcome everyone to Smart Money, which, as has been said, is part of Schools for Children's Different Choices project. Last fall, when we first offered Different Choices, we envisioned an annual college and career fair for students with learning disabilities and social emotional challenges. Based on the feedback we received from students, families, caregivers, and support professionals, we've expanded beyond a yearly event, as evidenced by this finance series. So, while it may seem that many services end when students leave the world of IEPs, 504s, and high school support staff, excellent programs do indeed exist. Finding them on your own, granted, can be overwhelming. With Different Choices, we're collaborating with wonderful partners to bring together resources and information that help students and their families make a successful transition to college, careers, and other post-high school experiences. Together, we are also working to end the stigma associated with disabilities. Enjoy tonight's presentation and visit us at differentchoices.org for other programs. Let us know what you need to make the transition from high school to college and career easier, more hopeful, and something that you can anticipate with comfort and confidence. And Rob, thank you. I've been looking forward to your presentation.
Thank you. I'm very excited to speak. Should we get started?
Yes, please.
All right, let me share. Can everybody see my credit awareness screen?
Yes.
Fantastic. So, welcome everybody. Thank you for having me. My name is Rob Opp. I work at TDBank. I'm here to talk about credit awareness. I am here to also talk about, the role that credit plays in reaching our financial goals. So during this presentation, we'll explore easy ways to build, maintain, and repair our credit. I will say, if you have any questions, feel free to throw them in the chat, and Nina or Denise will flag me down and stop the presentation. I want to get the questions while they're fresh in your mind, so we don't necessarily need to wait till the end. And the more questions and the more interactive you are, I think the more enjoyable this presentation will be for everybody. So with that being said, let's get going. So here's an introduction, a little bit of what to expect. Today we'll explore how credit scores impact our financial choices, accessing and understanding credit reports, building, maintaining, and repairing credit card tips and strategies. We'll cover the following objectives throughout the presentation. So frequently thought questions, if these go through your mind, you're on the right track, right? You're thinking appropriately. Just checking my own credit score report, lower my score, which is a common misconception. How often should I check? How is my score calculated? And many other questions. So these are things that if they're going through your head, I'll make sure we talk about these specifically, right? How do I choose the best credit card for me? Should I have only one credit card? Right, there's a lot of great questions here, and I look forward to going through some of these. And of course, goal setting. How is a strong credit score going to help you? So we're going to explore the why to ensure learning, how a credit score can help you with renting an apartment or qualifying for a loan or buying a home. Here we go. We're going to talk about what is a credit score? How does a credit score influence our daily lives? So some things about a credit score that are very important is this is going to be looked at for every major purpose that we have, right? Every major purchase, that we have, whether it be a home, an apartment, anything that you need a loan for, people are going to check your credit score. So these are things that, while it may not seem important, you certainly do need to maintain and stay on top of it at all times, right? So let's get into specifics a little bit. A credit score is a 3-digit numerical rating that predicts how likely we are to repay our debts, right? It's almost, the lender sees this number, for example, 726, and that gives them an idea of how reliable we are to pay loans back. The higher the score, the greater our credit worthiness is to potential lenders, right? That will be more trustworthy, that will pay back our debts. Credit scores have been used to measure risk for decades, but the system behind it can seem a bit complicated. So don't worry, everybody has questions. There are many different companies that also do it. So you can see an example score. You might have many different scores, right? 726, 698, 711. There's different credit score companies. So they all use their own ways of giving you that number. So one is FICO, the Fair Isaac Corporation, and it provides one of the early and most common methods for calculating credit scores. So many of us still hear FICO score and credit score used interchangeably. But today, many companies have their own methods for calculating credit scores based on the information of your credit report, which means your score might vary slightly across reporting agencies, but the ranges will be the same. In general, scores have ranged from 300 to 850. Some industry specific scores, the automobile industry, credit cards, they can range from 250 to 900, but typically we're looking at 300 to 850. So here are some other data companies, right? Equifax, Experian, TransUnion. As you can see, the timing, your scores are not calculated on a fixed schedule, so they depend on when data is updated at reporting company and when your score is actually calculated. All right, let's jump to the next slide and get into more details. All credit score calculations depend on the details from your credit report. They consider a number of key factors, right? They highlight factors that affect our scores, and they weigh more heavily than others. Late payments adversely affect your credit score, right? And it can affect it for up to 7 years. So as you can see on the slide, your credit history and behavior form the basis of your credit scores. Your payment history, if you're on time, if you make your payments, credit card payments or loan payments on time, current unpaid debt and percentage of available credit used. So if you're looking for a certain loan and you've received a loan, how much you've paid off is typically how much you'll be available to get back. So if you received a $100,000 loan, you paid off $20,000, unless you've got a raise, you'll be eligible to get 20,000 back again if you needed that additional $20,000. You might even qualify for more if you're making timely payments. Length of history of how long you've been paying loans, new credit applications. So just applying for a credit card does get put on your credit history and your credit report, and that's not always a good thing. So I would be very wary when you go to a New York Mets game or a football game and they say, fill out this credit card application, I'll give you a free blanket or something. Be very careful with that because that does go on your credit report. And types of debt and when this debt started. So there's a difference between good debt, or what lenders consider a good debt, versus a bad debt. A good debts are typically a mortgage for a home or student loans. And I know that's a popular thing to discuss these days, but student loans are considered a good debt by lenders. Now, if you have bad debt, they'd be less likely to give you more bad debt. So bad debt could be large credit card payments or even car payments and whatnot. While a car is a necessity and you need it to get to and from work, it's not always considered a good debt.
Wow, why?
Because, if you buy, you could buy a Chevy or you could buy a Lamborghini, right? And the payments are so drastically different. But just because you can afford it doesn't mean it's a good payment or a good debt rather. But
Fascinating.
yeah. But, those are things that get considered when you're asking for a loan. And believe it or not, the amount you're paying on that loan is considered, and it shows your willingness. If you bought the Chevy instead of the Lamborghini, it is showing your decision making. Believe it or not, these are all
Gotcha. So they're just super judgy.
Yes, well said. They're super judgy.
So Narun is asking, isn't a car more of an expense? Narun, do you mean by that, like, can you explain a little more what you're asking? Like it shouldn't, well, if you've paid it off, but like, I guess if you took out a loan on it, she's saying, isn't it more of a liability?
Well, so I understand what your question. It just depends on how big your payment, right? So when they do pull your credit score, if you're making your payments on time, that's going to help it. But if you're looking for a larger loan, like a mortgage for a house, they're going to see how much money you're making. And if you're paying a certain percentage for your vehicle, like a Lamborghini, right? They're going to see that that's a really high percentage for your car, as opposed for a car that might be more within your means. So that's where they'll start to judge you for the bigger loans. But it is a car is certainly a necessity, especially if you need it to get to work. So just because you have maybe a $30,000 loan or what have you for a vehicle, it's not going to be necessarily bad, but it's the percentage of how much money you make is what they'll be looking at.
I never knew that.
They're judgy, like you said.
They are judgy.
Whoops. All right. Understanding credit reports. So I'm curious, how many of you have checked your credit reports? I'm sure, if you can give me a raise of hands or not, but if you haven't, that's fine. This is what we're doing here today, right? Let's talk a little bit about it. So what kinds of things does it show you when you go to Equifax.com or Experian? Credit reports provide potential lenders an insight into our current debts, right? Car payments, credit card, etc., as well as our past payment history. So potential lenders will use your credit score and credit report to make decisions about whether you qualify for a loan and what interest rates to offer you. And that's a big one, right? You're paying off interest, money that you're not even borrowing, but it's just, if they're going to give you money, they're going to make you pay extra for it. So it's important to monitor your credit report, and there certainly could be inaccuracies in your credit report. And I believe that has happened to some people on this call. I know it's happened to me before. I went on Experian. I saw that I was getting a negative review for something. I called, and it was just a clerical error. But what that mistake would do, if I didn't check and see it, was it would, if I were applying for a loan, that error would negatively affect my credit score, which means I'd have a higher interest rate on my loan and I'm paying more money. So if I'm getting $100,000 loan and my interest rate is 5%, well, it could have been maybe 4%, but because of that mistake, it was costing me more money out of pocket. And guess what? If I would have found that mistake down the road, I promise you nobody would have gave me that money back, or they're not just going to switch my interest rate to where it deserves. So nobody's going to check your credit report and your credit score for you to make sure it's appropriate. It's up to you, and it might cost you money if you don't do it.
And you were saying earlier, does it like hurt you if you try to check it? People think
So,
that.
Yeah, so it depends, right? It's monitored. So it is a myth that if you check it or you go to Equifax or TransUnion, no, that will certainly not hurt your score. But if you keep applying for credit cards, or you want to go buy a boat or something, who doesn't want to go buy a boat, right? People will check your credit score and they'll do an inquiry, right, to check to see if Rob can afford a boat, which I can't. And they're going to see that he's curious about all these big decisions or about these big purchases, right? And the more people keep going in and checking, it kind of draws a red flag to the people drawing the credit, who give us our credit number, right? Because there's just a lot of inquiries. The inquiries aren't good. If you're doing it yourself, it's plenty okay. But if you keep, applying for stuff or loans, it does raise some red flags, especially if, if they're huge purchases like a boat or something. So here's a little example, right? Marie, what did Marie find in her credit report? Identity information, right? Her name, social security number, address, current credit cards, and the one she's using, right? 2 cards with less than a 10% balance. That's great. That's going to make her credit score stronger, right? Car loan payments, bummer. It's showing 1 late payment in her history. That'll lower your score, right? Makes sense. You do things good, you pay it on time, it goes up. You miss it, it goes down. Credit age, oldest account, 10 years, celebrating a decade of responsibility. So what does that mean, right? The longer you're proven that you can pay back your debts, your credit card, your mortgage payment, whatever it is, your score gets stronger. They're seeing that you're accountable and you're reliable. So that will build you some credit, right? Hard inquiries. Wait, it's saying she applied for a loan that isn't accurate. Okay, so a hard inquiry, like I mentioned, right? If you're buying a boat or something like that. A soft inquiry would be if I wanted to check my own score. That has nothing to do with it. And if you're applying for a credit card or a mortgage or something, they'll typically tell you about that they have to pull your credit report, and they'll tell you if it's a soft inquiry. They're very outspoken about soft inquiries because they don't hurt you. So they don't want you to know that it's not going to hurt your credit number. So that's something to think about too. What else is going on, Marie? Derogatory marks. Hold up, there's a collection listed for utility bill that isn't accurate. It's like what happened with me, just a mistake. You can call them, right? You can call these companies and your credit report, wherever you pull it, they'll give you this information on where to find or how to get in contact with these companies, and they can fix that. And that could instant credit report number, your credit number will rise, your credit score will rise. So, you see the tip there. Credit reports can have mistakes. That's why it's important to read them. They tell your financial story. So if there are mistakes, you're the one most likely to spot them, right? I'm going to know I didn't inquire about buying a boat. Maybe there's identity theft going on. There could be a lot of factors at play here. So, it is important to know what is going on, and no one's going to do it for you. And if there is something wrong going on, it's going to cost you money. It's just the bottom line. It's going to cost you money, and nobody's going to know it's wrong unless you do it yourself. Do we have any questions right there? Do I have anything popping up, Nina?
We are good. I think anyone have a question? I mean, I think if I could ask for people, I think a good question is like, let's say you don't have all the money to make a payment, is it better to make half a payment than to miss a payment? Do you know what I mean? Like in terms of your credit, what's better?
Sure, absolutely. And yes, it is better to do that. And you can also call the payment that the company that you owe money to and let them know about this. And they're typically appreciative of at least knowing, and they might try to figure out another payment plan with you. Now, I will say, if you miss a payment or you're late, maybe you thought you had to pay on the 1st of every month, but it was the 15th or vice versa, and you're late, you can just call them, your credit card company. It's, let's say TDBank, right? You have a TDBank credit card. You can call them and just tell them, sorry, it was an honest mistake. I made the payment in full. And they're typically very willing to just scratch to not put that negative inquiry on your credit, assuming it doesn't happen very frequently. But I would highly suggest everybody check their score, especially if they want to make a big purchase, a home or a car or something like that.
Good to know.
Yeah, these are good things. So here you see the credit report review checklist. Look at that, right? Reading the report may seem like a big task, but the checklist breaks it down into digestible bites, if you will, right? So you can find these if you went to www.consumerfinance.gov. You can all see the link there. And I'm happy to share this presentation so you will be able to just click on it. But it is a step-by-step that walks through reading a report, watching for mistakes, and how to dispute inaccuracies, right? So some of the basic questions is your name, social address, all correct? Sure. Are you listed as a co-signer on a loan? Is this correct, right? And that's a big one, because if there is identity theft happening, you would probably know if you co-signed a loan. So if that says you co-signed a loan, that means you're helping somebody else make a big purchase, which you would know. And if you didn't do that, that's certainly going to cost you big. So look at number 17 here. It says, wrong button. It says, is old negative information still being reported? And typically, if something negative happens, late payment, and you don't dispute it or something, it stays on your credit report for 7 years, which is a very long time. And after 7 years, assuming you don't continue to make late payments or whatever the reason there's something on there, it should just go away. But everything's dated, so you can check that. You can check out your credit report, and it'll show you, something negative happened in 2010 or 2010, and it should be off my report. And if it's not, that's just something to keep an eye out for. So this checklist is very handy when you're looking at your number on what you're actually looking for.
Somebody's asking if you could potentially just put that link in the chat now so that people can click on it. If that's not too hard to do in the middle.
I'm certainly going to try. I think I might just type it in real quick.
Probably best.
Yeah, right. Hold on, sorry. Chat.
And yes, we will be sending you the webinar recording. We'll also have it up on our YouTube channel probably by tomorrow. And everybody who registered will get a copy of the link to the recording on YouTube, as well as this presentation. So you'll have the slides and you'll be able to click on it all then as well.
Well, clearly I'm having some technical difficulties, so I do apologize.
We'll get that to you. I promise I'll get that to you. So don't worry, everybody.
Yeah, thanks. Feel free to email me, robert.op@td.com. That'll be here, but I'm happy to send you this link, or feel free to send me a YouTube video on how to copy a link and put it in the chat. So I would appreciate that as well. Okay, moving on.
No worries.
So, this building, maintaining, repair, and credit, right? So there's no, like we spoke about, there's no magic formula to building strong credit, but let's just talk about the basics, right? The things that we know will work. Pay your bills on loans on time, every time, even if it's just the minimum payment. So when you take out a loan, before they give it to you, they will let you know how much you owe a month, right? Let's say $100 at minimum. If you pay $100 a month, that loan is going to be take as long as you agreed to pay it off, right? 5 years, 30 years, whatever the loan is. You're going to pay the maximum amount of interest on that loan, right? Let's say it's 3%. So you're paying an extra 3% on top. You're paying an extra 3%. So $100, right? If you were to spend $125 every month instead, that loan will get paid off quicker, right? So just some advice. If you can pay more off your loans quicker, great. If you have a financial advisor, you might want to talk to them about this first too, because it depends on the loan and, you know, putting your money elsewhere in stocks or something. But if we're talking about a credit card loan, I would pay off as much as you can, being comfortable to keep interest rates from really costing you more money down the long run. Don't get close to your credit limit, right? Stay 30% below 30% of the limit, right? So if they say you are cleared for $100,000, this suggests they should stay 30% below and take $70,000. Now, a lot of times they won't give you 100% for this exact reason, because they want to make sure that you don't you don't go broke and not pay them, right? They have just as much to lose. They have a lot to lose, right? So if there's $100,000 and they don't, and that's your max, if they give you 70, they, being the lender, feels a lot more confident that you'll be able to pay that off. Have high credit limits. Ask to get it increased and use it responsibly. Don't close your oldest credit card. Okay, so that's kind of what we spoke about before. A long credit history will help your score. It shows you're trustworthy, that you've been able to do this for a long time. Only apply for new credit accounts that you need. Opening lots of accounts in a short time is red flag to lenders. I swear I said that thing earlier. If you go to a football game, you fill out these credit cards just to get a free hat with the logo, with the TDBank logo on the side. Yes, they're very fashionable and great, but I would recommend you do that. And dispute inaccuracies, right? Go on there. Nobody's going to do it for you. You know, no one's going to go on your credit card and say, you know, Rob, you bought that dress, and it says it right here. No, maybe it's a clerical mistake. Maybe it's somebody doing it with my credit card and my social security number. It's another good way to, you know, stay on top of fraud too. Oops, that's not right. All right, so building, maintaining, and repairing credit, disputing inaccuracies, right? So steps to filing a dispute checklist. So if you find something wrong with your credit report, you should dispute it, right? Mistakes can quickly damage your credit. To correct a mistake, it can help to contact both the credit reporting company, so some of the ones we had listed earlier, like Equifax, and the source of the mistake, so possibly TDBank if we're a credit card company for you. Write a letter to the credit bureau that sent you the report. You could probably call them. Provide the account number for the item you feel is not accurate, whether it be a credit card payment or whatever it is that's on there. Make sure you can concisely describe why it is not accurate, right? You got to be able to speak to it, because they don't want to just take these off, right? If you're not paying, something says you're not paying. This is a long process, so you need to be able to defend yourself accurately. Include copies of bills or cleared checks that show you have paid them, right? If you're paying online automatically, have that information available. Provide your address and telephone number so they can contact you, which they will, I promise. Make a copy of your letter to send it before you send it to the credit bureau. That's just kind of, you know, it's showing what you're doing and the steps that you have taken. And then again, sending a letter. If you use certified mail, it makes everything official, right? So if this were to go to the court system, you can show every step you took in place to dispute an inaccuracy. This is if it gets really intense. I will say, typically, whenever I've had to do one, and it was not that many, my wife did one, I did one. You call, they do a little research, and they'll typically find that it's a mistake on their end, and they'll fix it quickly. But if they say no, these are the steps you should 100% take.
There's a few questions.
Any questions on this? Great.
There's a few questions in
Fantastic.
general.
Let's hear 'em.
It's one is,
Oh,
how do you get interest rates lowered on a line of credit? I've tried and they won't do it. Also, I recently paid off one of my credit cards and it is a zero balance. I have another credit card to pay off now, so I don't want to use it. Is this bad for my credit not to use the credit card so I can use that money to pay off the other credit card and better my line of credit?
all right. So
I think the first question is, how do you get interest rates lowered on a line of credit, right?
on a line of credit, okay. So if you already have an existing line of credit, if it's paid off, it's first of all, the rates are dependent on market, right? So while yours can get better when your score is better, if you just ask them, they're probably not going to be able to just give you a better rate. And I do apologize for that. But it goes by your credit score too, right? So if your credit score is high, you'll get better rates because they deem you more trustworthy of paying back these debts. It's really that simple. And if you did want to talk to your lender about that, you can talk to them about how your score has been increasing, or how it's good in the first place. Again, 700 and above is a very good score. So if you're around there, you should be getting good rates, but they'll typically want to give you the best rates they can to be competitive with their competitors, right? With other lenders or banks. So if they're not going to give it to you, I don't think you're going to be able to switch their mind. So I do apologize to be the bearer of that bad news. So the other one, paid off a credit card. They have another
It
credit
has a zero
card.
balance, but there's another credit card to pay off. So now I don't know if it's here, they don't want to use it, which the one that has the zero balance, I'm guessing? Is this bad for the credit card not to use the credit card so that I can use that money to pay off the other credit card? Like, will she get penalized? Will they get penalized if that's what they're doing? If they're not using the card?
No, you will not get penalized at all. I would suggest you use it at some point. Don't just let it sit there forever at zero balance, because then that's actually not good for you. So you will get penalized, but you have a lot of time before it gets to that. Regarding paying off one credit card by using a different one, I typically wouldn't recommend that because credit card rates aren't ideal. I mean, if you have to do it, I would say no, don't do that. Typically, it's no, not to pay off one credit card by using another credit card. But regarding just having a credit card sitting at zero balance, no, it's not going to penalize you immediately. If it's like that for a long time, they might just notice that there's no activity on it. So it's almost like closing a credit card, which you don't really want to do either. If you don't have to, I would just use it once in a while to just show, right?
Yeah.
Use it for small purchases and pay it back. And then they're like, wow, Nina's using her credit card, she's paying it off to zero every month, right? That looks really good. So
Yeah, it's interesting. I think, like, I came from a family of immigrants and their thing was no debt, right? So they wouldn't buy anything they couldn't pay off. But then when they went to like apply for a loan, they had no history. And they were like, what do you mean? I've never occurred any debt. And yes, that's the problem. And they were very upset about this revelation.
I grew up with that same mindset. Same thought. Yeah, mindset. Thank you. Sorry about that. And it's just not true. You need to keep proving your ability to pay this off and be a trustworthy spender and consumer. And as long as you do that, people are more than willing to give you money with an interest rate, because it's they're getting more money in return. But certainly use your credit card, use it wisely. Don't max spend, but use it to pay off the things you can, and it's going to look really good for you, especially if you're able to pay off the balance monthly.
Another question is, if you have a payment plan and you have a minimum payment to make every month, is it possible to pay more than the minimum for one but not the other?
If that means, I'm assuming that means like two credit cards, you're paying off the minimum for one, or you're paying the minimum monthly for one and more than the other. Typically, most places will allow you to pay more if it's a credit card. If they're two separate cards, it doesn't matter if you pay one.
No, they're saying it's months. Not
Oh,
two different cards, like different months, like pay more than the minimum 1 month and then not the next month.
you can, yes. As long as you're paying the minimum, right? You know, there's a whole school of thought that should you be paying more to get down, you know, how much interest you're going to be paying in the long run, or should you be taking that extra money and investing it? And that's a whole nother, you know,
Conversation.
yeah, that's not something I'm going to be talking to, but I will say, for instance, I have a 30-year mortgage on a home. I try to pay a little bit more because I'm paying all that interest, and hopefully I'll pay off this loan in less than 30 years, which means I might save a year or 2 years of interest, right? And that is, while it's more money coming out of my pocket now, it's considerably more money I'm saving down the long run. So if you are financially able to put more money down on your payments, you should, because if not, you're also just going to be accruing interest, which might make your payments kind of go longer because you're keep owing more money. So, but if you can only
But
do
it wouldn't mess up her, like if she's like negotiated a payment plan, it wouldn't mess up her payment plan to pay more 1 month than another. I think that's the question.
So typically on a credit card, typically you can pay, as long as you're covering the minimum, you can pay as much as you want. For other purchases, they may not allow you to pay more per month. And that is something you have to ask them directly because they want the interest, right? That's how a lot of home mortgages used to be. I do know the two I currently have, I can pay more now because they're just happy to get their money, right? But it depends on the lender. I hope that helps. But if you reach out to them, they will certainly be able to answer that.
Yeah, I think a conversation with the lender is always a good idea.
Yes, they will certainly answer your questions, and they want their money just as bad as they want as you want to pay them the money. So they'll be able to give you the right answer.
Thank you.
Sure. If there's no more questions. So building, maintaining, and repairing credit. Sometimes things get off track, right? And it happens, especially at the age of being right out of high school. I remember being that age, and I certainly remember missing payments. But there are things you can do to rebuild your credit, right? Before we get to those things, just know it takes time, right? But it is important, and it's worth the effort. You can't just call them and say, well, I did miss a payment, but take this off my credit report because I want my score to be higher. They're not going to do that. But if you keep showing that you are paying things off in time, maybe if it's a Target card or it's like a retail store's credit card or something, they're a little more flexible if they've seen that you've paid off what you've owed, or that you've been more trustworthy and on time with your payments. But I do know that typically it takes some time. Review your report to identify areas for improvement. Again, we had that earlier slide, but it'll show you where you might be having trouble, whether it's taking on too much debt or whether it's just not having your payments done on time. Create a plan for reducing outstanding balances. So that kind of goes to the point of when I was saying pay more on your credit card if you can, because if you're paying the minimum balance, well, the interest just goes back on your total of what you owe. So, if I lend you $10,000, you're going to pay me back more than $10,000. So the longer you wait, you're still paying interest, and it's more money. And that got me when I was younger. Why am I still struggling to make these payments? I thought this would have been done by now. But once I started paying more, I paid less interest and it went towards my principal balance. So if you can create a plan, maybe spend less, maybe don't get the extravagant things, but also try to pay off more monthly if you can. Improve your payment history. Call about payment plans, right? Companies don't want you to default on your loans. So they will work with you if possible to help you get out of a payment plan that's not working for you. Talk to your banker, right? TDBank is a great one. Secured cards, credit builder loans, and other products can help establish and build credit, right? I didn't have any credit out of high school. I went to college and I just racked up debt, right? And that took me a while to build out of that. But if you are proactive and you do things like maybe get a low, a credit card that only has a small balance, so you can only spend X amount of dollars, but keep paying that off, then you'll be eligible for more products down the road. And those are just small steps you can take. So whatever bank or financial institution that you like or you attend, and I would highly recommend TDBank, go to them and have this conversation. They're happy to get you started in the right foot, right? There are programs and products in place for young adults to get started and be proactive about their credit. Certainly something I would have benefited from many years ago when I was 18.
So Edwin's asking, how does someone starting out build a good credit score out of the gate?
Get a good credit card and make payments that, only make purchases on things you can afford. If you're going to the corner shop and getting a soda every day instead of paying with cash, put it on your credit card and pay that on time. That will certainly, help your credit. Now, just I hate telling a young kid, get a credit card, right? Because those things can spiral very quickly. So you do have to make sure you're not going and buying a TV you can't afford or a car or something like that, right? It really does start with you, with being a responsible spender, knowing what you can and cannot afford, which is why so many people, like Nina said, just decided, I'm just not going to get a credit card and go into debt. I'm just going to pay cash and avoid this headache altogether. And while that seems to make sense, saying it out loud, using a credit card shows lenders that you can spend responsibly, right? You're not getting a credit card and running to the store and buying stuff you can't afford. So that's really what lenders want to see, is that you can spend and purchase responsibly. And that's how a credit card can prove that, because there is a trail of your purchases, right?
You want to prove a good credit history.
Yeah, exactly. You want to show that you can, because that's what a credit card is. Essentially, it's they're lending you X amount of dollars and you're showing every month you paying it back, right? And then when you want to get a mortgage and buy a house in X amount of years, they're going to say, wow, you've been paying your credit card for 18 years or however long it is. This guy's responsible. He has a good credit score.
A good advice I heard was get one, set it every month you're going to spend $20 and pay it off, and then leave it at home. Because if it's in your pocket, it's going to get used, right? So
you know what great life hack right there. Great job. That's a great example. Spend a little on it. Don't necessarily have it in your wallet when you're going to Wawa, I'm in Pennsylvania, and spend and buying everybody sandwiches or something like that, right? Maybe only buy things online a little bit that you can afford or something. But yeah, great thing. That's a great suggestion. Absolutely. But again, there are products in place that banks will put together for you, right? They'll probably start you a checking account and a saving account and maybe a credit card, and just to help you get your credit up there. And there might even be more. So I would highly suggest just taking a trip to your local bank. Any more questions, Nina?
We're good right now. Thank you.
All right. These are great questions, by the way. I'm very impressed. So keep them coming. All right. Credit cards, tips, and strategies. How can credit cards help and hurt your credit score? If we had an open mic, I would ask, because I would love to hear what people think are myths, or what they think some of these things off the bat would be. But let's just jump right into it. Okay, so we did talk about how you can build up your credit with the credit card by spending on time, or by paying off your debt on time, right? But convenience has a cost, right? It's great. Financial access when needed is great, but interest adds up quickly. And I did talk about that before, and something that I struggled with when I was young was I thought just paying this monthly payment, the minimum, would suffice to get me out of debt, but the interest on it adds up, right? So it's interest at, all right, if I had $1,000 loan and I'm paying only my minimum of, I don't know, $50 a month, but there's a 10% interest rate or whatever it might be, that's more money that I have to keep spending that I don't necessarily have it coming out of my pocket. So I can't, it's just going to come on the back end of the loan, and I'm going to have to keep paying it longer and longer and longer. So know what you can afford and ideally pay it off as much as you can monthly, or the whole thing. Responsible use pays off. Low balances and paying on time are great credit score builders. I've said that a lot. We talked about that. I think that's ingrained in every viewer's head here now. Read the fine print. Understand your interest rates, special offers, and what you are responsible for. Interest rates will vary on a lot of things. Your situation, your age, your job, work history. None of those things are going to be in your favor being young, because you don't have a long work history and you don't have a lot of history of paying off credit cards. So your rates are just going to be a little bit higher. And that's just a fact of life. But know of special offers, right? That's what it says on there. I got one when I was in the military. I was able to get a loan because of my military service. So a lot of these products are out there, and they might be, for kids in a certain area where you're located, or young adults, I should say, excuse me. So do talk and do ask those questions if there are special offers or products. Stay in the know, right? Read letters, emails, and other notifications. I know we all love receiving bills in the mail, but they're important. We do have to read them, right? They do come and show how much we're paying in interest and how much we're paying off the balance of what we actually received. If you can't make the minimum, grab the phone and call. Don't let a tough moment turn into a credit pitfall. Talk to your credit card company. So Nina, that was your point you made earlier, right? Do you make a half payment? Do you just let it slip? You call, right? Because these things happen. You won't be the first person to miss a credit card payment or go through a tough time or something. They have protections in place for this and plans to help. The worst thing you could do is just ignore it and hope that they'll just
hope it goes away.
Yeah,
it won't.
It won't. I promise you. Somebody's going to come for their money, and they're going to get it, either money from your pocket, they're going to garnish your wages, or there's a million other things that could happen. So,
or just mess up your credit.
Destroy your credit. And guess what? You want to buy a house or something, that'll be really difficult to do.
There's a question
ways to fix it, but still. Yes, fantastic.
There's a question that says, I was told before that making yourself an authorized user on a card of someone with good credit helps your credit. Is this true?
Well, I don't know who could make you an authorized. I'm just trying to think.
I guess maybe a parent. Is this potentially a parent that we're talking about?
And if it is, it certainly can't hurt, assuming your parent is paying their bills on time, right? I know, actually, a favor my parents did for me when I was young was they had a credit card with my social security name, which they used. And then when I was able to, be an adult and spend stuff, I had good credit. So it can kind of work like that. They signed off on it that way. But I got to imagine it can't hurt. I would talk to your lender or your banker about that, because I don't want to steer you in the wrong direction, excuse me. But I certainly think that is an option of something that can happen. Yes.
Cool.
Very smart question. You got smart kids.
Yes.
Or young adults, excuse me. All right. I'm going to go to the next one then. Thank you. All right. So thank you everybody for this. I really do like helping as much as I can. If there are questions, you can reach out to me directly. On the next slide, I am going to have my email address. So reach out directly. I would also say, if you're interested in careers at TDBank, reach out to me directly, because that is what I do. And I'm happy to look over resumes or do anything else. If there's a question you have that I did not answer or I was not capable of answering, please email it to me. I work at a bank, right? I work at America's most convenient bank, as a matter of fact. And we have a lot of very smart people who can answer these questions and are always willing to sit down and have conversations if you need them. Or, if it's just an email, I could send an email out and get these questions. So all of these links will be in the PowerPoint presentation that I share with the group.
And we'll send that out after the presentation. Anyone else have questions? I know, as kids start to head off and think about student loans, any advice you have from your experience with student loans, I'm sure would be very much appreciated.
Just be prepared that you got to pay these things back. And I know this is, that might sound so silly, but if you spend a lot of money and they will give it to you for student loans, because that's considered a good debt, they expect their money back. And I would not rely on the government to forgive student loans. I know that's a very hot topic right now, but you can't depend on somebody to pay your loans or forgive your loans, right? So assuming that's not going to happen, if you go to a school, maybe a college that you're getting or where you could have a scholarship offer, that would be very helpful. But student loans, I'd be careful going private with that, because the interest rates, while they might be better, you don't get as much support through the process as opposed to going through Fannie Mae, which is a government-backed student loan. So be careful with student loans. Obviously, you'll need them. I paid student loans. My wife paid student loans, but we paid it for a really long time. My wife's still paying, as a matter of fact, and we're not teenagers anymore. So, they're good. They're a necessary evil at times, but I would just be sure that you know what you want to do in school too, right? Because if you go to school and then you go to grad school and you come out and realize you didn't study anything you really wanted to, and you don't know what you want to do, and now you're not making any money, well, those student loans will still need to be paid. So make smart choices, young adults.
Another question is, what's the range of a bad credit score and what's the range of a good credit score? Like what do those numbers look like?
Those kind of fluctuate a little bit. But I will say a very good credit score is in the 700s or above. Even 650 and up is a good credit score. It depends on your age, but I would say 650 and above is where you want to be. A bad credit score is probably, in the 5s or lower. It really depends. If you checked your credit score now, you may not have anything, because you may just be getting out of high school or not have any sort of credit history. So I wouldn't be concerned if you see something now. If you have a low score because you're not making payments or you're skipping payments or whatnot, that's where I'd be a little more concerned, and you have to really put some more planning into your finances. But for everyone just getting started, pay your bills on time, get a credit card, pay it on time. You'll be good. That'll help you.
Other questions? Anyone?
This is Denise. I have a question, which
Hey.
is, I have a question that's, I guess, for older folks and not necessarily for young folks, but for maybe the parents, guardians of these young folks.
Yes.
If you have a charge that you disagree with and you can't come to an agreement with a company, what is your recommendation? If you just have something delivered, and I had my mother's best friend, they dropped they brought it in her home. She said, "I will not take it." And they said, we're not going to take it back with us. And so she's like, "I'm not paying for, this thing, not the whole thing. I'll give you maybe some money, but I'm not paying for the whole thing." What do you do in a case like that? Because I'm assuming that your credit is very important for your child, when they're applying for school. So you need to have your own credit, I think, in pretty good shape, don't you?
Yeah, certainly. So I would speak with the lender, right? That's the first thing I would try to do. And if it is something that there's just a disagreement, then it goes back to that one slide that I have. And I can't recall which number it is right off the top, so I do apologize. But where it had slide 12. Let me go to slide 12 real quick. Oh, here it is. So, oh no, that's not it either. Right here. So, write a letter to the credit bureau about this, right? About that you are in an argument about what's happening. It shouldn't be negative, somebody else's discrepancy or shouldn't be hindering my credit score, right? So I would look at this dispute checklist like we spoke about, but it's important to almost show your work, right? To mark everything you're doing. That's why they say write a letter, right? And you can have it certified with mail. So if it does have to go to the court system, the judge will see that you've taken action to have this at least done, right? So that will certainly be in your favor. But you got to get into the details. You got to show payments, why you feel like you've been wrong. You got to write this in a letter with any sort of proof that you can send. And it's almost like the credit bureau will make a decision. And if you don't like that, then it gets into the legal system.
We have a question. What is the minimum age for a credit card?
Minimum age. Well, I have to imagine it's 18. I don't actually know that. But I believe it would have to be 18.
I think it is. I mean, I think it would be I would be skeptical of any company giving a credit card to under 18-year-olds.
Yeah, to a non-adult, right? Yeah, I'm gonna confidently say 18 years old. But
I would say if somebody offers you a credit card and you're not 18, question that.
Yes, especially if it's not a legit bank and it's somebody, in a van with credit cards.
Right. Yeah. They may be trying to steal your identity.
Right.
Yeah.
Yes. And I would recommend that you do go to your local retail, bank store and have these conversations about, you want to get started, your credit's important to you and you want to get your credit score on the right track for your future. And listen, I know this stuff is not interesting. I know it's not. And right now you're all at an age where you're just, life is so fun and so amazing, but these are one of the things you got to do. You got to get these things in order because it'll help you so much in the long run. So if you remember anything from this, go to your local bank and talk about how you can get your credit on track. So when you do decide you want to make these big purchases, you'll be in the clear, right? They'll give you all the solid advice and paperwork you can get.
Yeah, looked it up. It's definitely 18.
It's definitely 18. Yeah.
Definitely 18.
Good to know. Another question is, do you ever recommend debt consolidation or taking out a personal loan to pay off a credit card debt? And does debt consolidation keep you from using any or all of your credit cards?
Great question.
Yeah, that might be a little above me. I do apologize. I don't want to give you negative advice or just incorrect stuff. So I can certainly reach out to someone who can speak to that, and I'm happy to get you that answer.
I think if you email Rob directly, that would be something he can look into for you.
I would say a lot of this also goes by interest rates, right? So if you take one loan to pay off the other one, what's your best interest rate? If you're taking a loan that's 1% interest rate to pay off a loan that's 10% interest rate, well, that would financially benefit you, right? But typically it's not that way. Typically it goes the other way. So you don't want to just keep paying interest or compounding interest from one to the next, right? So that's what you got to be aware of. It's not a common thing that people suggest you take one loan to pay off another one, because typically if you have a loan that you're not paying off, when you ask for another loan, they're going to see that in your credit and it's going to affect your interest rate. So it's not going to be as good of a rate as you probably already had. That's not necessarily 100%, but that's how it typically is.
What's the difference between good debt and bad debt is the next question.
Yeah, so good debt is like student loans, right? That is considered good debt. So when somebody is considering giving you money for a mortgage, maybe a house, they'll see that your good debt is your student loans, right? Okay, this is stuff that they're not spending money on so recklessly. Bad debt, credit card debt, right? So it's just as simple as that. If it's things that your mom would be proud of you spending money on, that's probably good debt, student loans. But if it's well,
also what you said before, I honestly never knew before was like if you're living outside of your means and the loan is going to pay for something that's just obviously not within your reach, then that's a bad debt, right? That I didn't realize. So that's fascinating to me. Do
Exactly.
balance
I
transfers
hope that
hurt your
answers.
credit score? Do you mean balance transfers from like a savings to a checking? Is that what you mean? Balance transfers?
Did I lose you?
No,
Can you hear
I'm
me?
just waiting for a response. The question is, do balance transfers hurt your credit score? But I'm not sure what the transfer is from.
Well, if it's from one account to the other, no, it would not. It wouldn't. That's just a standard procedure. You know, I put money across my accounts all the time.
Also, if a few of the students I know have texted me to say, my life is not fun yet. When does that happen? Because you had said, I know your life is all fun now. They're like, no, that's not happening yet.
Yeah, I can't give advice on that. I'm not young anymore. You know, for me, it's fun is going to bed at 9 o'clock. You know, that's fun.
Yeah, the past 2 years have not made students' lives fun at all. So
true.
yeah, no.
Very true.
I thought that was cute. I was just sharing.
Edwin, how does someone start out building a good credit score? Kind of like we talked about, you know, I get a credit card. I would go to the bank. Actually, that's what I would go to a bank and have a conversation. Somebody will sit down with you and have a conversation about products and offerings. And they have things exactly for people who are just getting started, right? And they'll look at your background, and they may not give you a credit card because they may not think it's the best way for you to start, but there could be other ways. So there's a lot of options, but I would highly suggest just stepping foot in, and somebody will take you aside and have a nice conversation with you.
Wonderful. Thank you so much, Rob. We really appreciate you. I'm just going to put up our final screen. So that was Rob, and then end slide. If you guys need anything from us, check us out at differentchoices.org. We have more events coming up, especially in September, around kind of college and career options. We have a lot of things going on coming up in September. But if you have any questions about these presentations, like I said, we'll be sending out all the information for this presentation and the slides and all that to everybody who registered tonight. So you'll be getting that shortly. But check us out at differentchoices.org and schoolsforchildreninc.org if you have any further questions about us. And please reach out to us or reach out to Rob if you had questions that you didn't get a chance to ask tonight. But, you know, like you said, I think I know, like, I'm not young, but I still hate calling people. But it really is a very good thing to do if you're trying to keep on top of your credit score, is to make sure that you're reaching out to the lenders, you're reaching out to the department store, whatever it is that you owe. If you can't pay or you need a payment plan or anything, like just talking to people will help you in the long run. So try to do that.
And I will say there are free services where you can check your credit score. This doesn't cost money to check your credit score. So
and it doesn't hurt you. It doesn't hurt your score.
Correct. It does not hurt. And it'll be in the, Nina, Denise, Paul, they'll be able to get you that information of where those resources are.
Definitely. Thank you so much, everybody, for joining us. Thank you, Rob. Thank you, Dr. Stein. And we will follow up with you and hope to see you soon.
Take
Thanks,
care,
everybody.
Thank you so much.
Thank you.